The stock market is crashing like a sack of potatoes. Here are two reasons why this stock market crash that we're experiencing might be intentional. I was just sent this by one of my clients. I want to read it to you. Trump is trying to crash the stock market at least 20%, causing a flight into treasuries. This will cause the Fed to slash interest rates so he can refinance the debt to near 0% and cause a deflationary spiral which will lower the cost of everything. He also intends to use tariffs as an incentive for companies to build in the US to avoid having to pay them. The tariffs and the resulting global trade war will also force American farmers to sell more of their goods in the United States due to retaliatory trade measures by other countries, which will directly lower the price of groceries in the US. More than 94% of all stock is owned by just 8% of the US population. Trump is literally taking money from the rich and giving it to the poor. This is why Trump is playing a game of hokey pokey with tariffs. One day he has 25% tariffs on Mexico, and the next day he doesn't. This is to cause extreme volatility in the markets and a desperate need and demand to flee towards Treasury bonds, which are much more stable but offer much lower potential return. In order to lower interest rates, to help the real estate market, to help the mortgage lending market, to help corporations that need to refinance their debt, he has to be able to crash the stock market in order for the 10-year treasury to go down. Well, how does this work? What happens is when the stock market is crashing, where do people flee to? They flee to the 10-year treasury. This is going to give them a guaranteed rate of return, and essentially when the demand for these treasuries goes up, the US Secretary of the Treasury, Scott Bessent, can lower the yield, which lowers interest rates across the board. Little sneaky, but it is one way of lowering interest rates. Did you see what the Atlanta Fed just came out with? The Atlanta Fed just came out with their report predicting that the first quarter of 2025 was not going to be a 2.4% growth rate for the first quarter of this year, but in fact, a negative 2.4% growth rate. What the heck happened? As you can see here, it went from a prediction of plus 2.4 to negative 2.4. Well, what the heck happened? I'll tell you what happened. The institutions got word that no longer will we be factoring in government spending from economic growth. You see, for the past handful of decades, they have been coupled or joined together. So when the government is spending, the economy looks like it's growing. Well, guess what happened? They just decoupled those two things. And now all of a sudden, government spending is completely detached from real economic growth. And the Atlanta Fed is predicting a negative 2.4% growth rate for the country. This is another reason why the stock market is crashing. I've been saying this for a while now, and by all measures, we should have probably had some sort of recession or pullback in the economy at the end of 2023. But one thing was not factored into why the stock market went parabolic. It went to the moon in 2024. That one thing was government spending. And not just government spending, emergency spending. What was the emergency, you may ask? The emergency was Joe Biden getting elected.
Let's go lick the world. Let's get it done.
I got them $1.9 trillion relief so far.
However, in spite of the economy booming, seemingly, the stock market going parabolic, primarily because of the Magnificent Seven stocks that went up, the real American wages were down over 2%. Everyday Americans like you and me had less money to spend, and the cost of goods was going up because of inflation. Corporate bankruptcies were soaring. Inflation at the pump and at the grocery store was going through the roof, and rates were super high when it came to new mortgages, credit cards, vehicle loans. All the debt that you could normally acquire was unaffordable. As James Carville so memorably quoted when Bill Clinton beat Bush Sr. in 1992, two, it's the economy, stupid. The reason why Clinton beat Bush was the economy. One of the main reasons why Trump beat Biden was the economy. Emergency spending didn't help Biden or Kamala get elected. In fact, it pushed voters towards Trump. Guys, emergency spending from our government is a massive problem. And now that we've decoupled the two, the emergency spending from the actual economy, we're going to see just how robust or weak the real American economy is. There was an article from the Cato Institute. I want to read the summary. The Cato Institute's article exposes a staggering abuse of power in federal spending, with Congress using emergency designations to bypass budget constraints and funnel taxpayer money into wasteful projects. What was once meant to address real crises has now ballooned into a $12 trillion loophole, with a shocking 12% of the federal budget labeled as emergency spending. This reckless spending spree undermines fiscal responsibility and threatens to bankrupt the nation. The article demands urgent reforms to restore accountability, including tracking every penny and forcing Congress to offset costs before the damage becomes irreversible. The bottom line is Trump may actually want the stock market to crash by at least 20%, because then he can get interest rates to go lower again. When interest rates go lower, the economy can boom again. Now, there's other trade-offs for having interest rates lower. The cycle starts over again. Inflation is going to be a problem in 18 to 24 months if interest rates go down, but at least the economy can come roaring again. Now, keep in mind, we've got midterms coming up. If we're going to have a recession, Trump is going to want this to be sooner than later. What does that mean for you when it comes to your retirement? What if you're approaching retirement? What if you're already retired? All I can say is that if you are in that category where you're approaching retirement or already retired, the last thing you want is to lose 20, 30, 40% of your portfolio. How long is it going to take to get back to the starting point? We don't know. If you would like help in securing your retirement to make sure you're not going backwards, and maybe you have already realized some losses, we have strategies on how we can make you whole. Whatever losses you may have experienced over the last couple weeks, there are strategies to actually make you net positive, make you whole. But if you want to learn more about that, give us a call, reach out to us. We'd love to have a conversation with you. We'll see you on the next video.